Hi, Michael Glennon from Glennon Capital, and just want to do a special thank you to Morgans this week, who started delivering all my mail as Michael Glennon, Global Chief Investment Officer of Glennon Capital. So thanks to the wonderful team at Morgans, and thank you for the promotion. It's very well appreciated. But on a serious note, talking about stocks and things that we like in the market, we mentioned in our quarterly update, our last quarterly update, talking about banged up stocks, or stocks that have had profit downgrades, and how I was quite optimistic about that. And we're starting to see some life in that segment of the market. So we've had quite a significant re-rating in the share price of Adairs. We've made some investments which were ongoing buyers in those stocks, so I won't mention what they are at the moment, but significant re-rating in things like Adairs, which has had a good run. We've also seen industry players starting to enter into the market. Gazelle's bought into Oriton Group. Oriton's share price has been terrible over the last couple of years, so it's attractive when you've got industry players starting to make investments in stocks that seem very depressed. We've seen a re-rating in RCG Group, which got down to very low 60s, and that's appreciated up into the sort of mid-80s level now, or early 80s. So where I mentioned a couple of months ago there's significant value, it's there. Industry players are starting to recognise that. We're still cautious about going in, investing in the retail sector because of that Amazon effect, but not only, as we alluded to a few weeks back, it's not only about Amazon, it's also because we think that Australians are very poor online retailers. So the guys that do it well, do it very well out here, and the other guys are very much committed to their bricks and mortar businesses and retailing through stores. So that's why we're seeing things like re-ratings downward in companies like Myer, which has struggled and has struggled for a while. So we haven't seen it, but we are positive now that there's industry players starting to invest in some of these banged up stocks. It doesn't always work, as we've seen. Channel 10's been suspended. We did a video on that a few weeks ago. So you do need to be very careful in these stocks that you're looking at. And as I mentioned, we're starting to find value in that sector and starting to slowly and patiently accumulate stocks that we think are trading at very depressed prices, and over the next 3 or 4 years will start to be turn around and improve what's been quite a weak condition for them. And there'll be management changes in some of those businesses, so there will be catalysts for the share price to re-rate. So that's our view on what's happening in those banged up stocks. It's an opportunity. You need to do a lot of work when you're there, but it is encouraging that you're starting to get industry players and some significant re-ratings upwards in some of those very depressed share prices that have really been oversold, as there was that shift by larger fund managers out of small caps and into big caps. I'm Michael Glennon. Thanks for watching. One of the reasons we sold out, other than the fact that it had gone into the top 100 and was out of our mandate, was because the company had quite significant PE expansion. So we bought the shares back in 2012. The market cap back then was about 500 million.